On the screen now you have the 1 minute Bitcoin chart just for your amusement, because probably going to be talking mostly about concepts and biases today, where I think the market is going to go as sort of a traditional finance trader, and what I see happening across the board with people's biases, with crypto Twitter, what it's kind of talking about versus what the price action is actually showing us for real. And so there are going to be a lot of nothing to really show you, so I wanted you to have something at least you can look at while we're talking. But let me get on with it here, because I know it's been a little bit. So welcome back, lovely people, women, men, cats, not dogs though. Dogs, I'm sorry. There's a crypto dog you can go follow, but you're not welcome here. You need to go. Anyway, today what I want to talk about with the markets is my own personal observation and something that I've been talking to a lot of kind of bigger players, market makers, whales about, for lack of, a nicer term. I really don't like calling people whales, but it's just sort of become the terminology for the markets. But as someone who's very deep into traditional finance, I thought I might have a little bit of a different outlook than what you're finding on crypto Twitter. And this is going to be something that maybe it's good for you to turn this on in the background while you drive to work, or just play while you're doing something else. Like if you're folding laundry or something, this would be the stream that you can just listen to in the background, since there's not going to be a whole lot to look at. We'll do some coins later on toward the end. We'll look at the DOGE short I talked about and how that played out. We'll look at Tron again, just to see, as kind of a generic representative of most coins, most altcoins right now, what that's doing. I want to talk a little bit about how Litecoin has performed differently this market than the last cycle, and then we'll just look at ETH and Bitcoin from a technical perspective. But what I really want to talk about today is that I think almost every facet of finance looks pretty bad. It looks pretty bad. I think when you're talking about real estate or crypto or stocks or bonds, mutual funds, whatever you're talking about with traditional finance or crypto, I think all of the markets look pretty shaky. And I'm not saying that they're going to drop 80% or something crazy like that, but my expectation is that in the near future, probably within the next 1 or 3 months, I expect us to get about a 10 to 30% downside on most markets. You have things like lumber that pretty much doubled in price, which drove up the price of housing, but the price of housing having gone up didn't matter because interest rates on mortgages were 0, so people wanted to buy houses anyway, even if they were more expensive, to lock in the lower interest rates. And it just became this cascade of profitability across the entire market. And most stocks, for example, if they're not like terrible companies, they're up at least like 20 or 30% right now. Most of them since the corona crash, if it's a legitimate company, have doubled or even tripled. And this is traditional finance. This isn't like crypto doing a 3x, which you kind of expect to happen daily. This is like, say, for example, Ford went down to about $5 and then up to 15. And that's a huge hundreds of billions of dollars company that has a real product that's been around for over 100 years, and it's tripled in price in the past year. And you can point to fundamentals. You can say, well, there's been so much money printed, there's going to be inflation, and that's going to sustain higher prices because everything will be inflated. But what we have already learned is that the Fed is going to step in sooner than they had planned to increase rates, to return to a normal situation where the inflation doesn't get as out of control as a lot of us thought it was going to, myself included. Because initially the Fed said, we're not going to raise rates until 2023. And so people who are playing off of that information, again, myself included, we're thinking inflation is going to carry these prices higher. And by the time the Fed steps in to correct inflation, we can cash out, the market corrects, we rebuy during the correction, easy money. Now the Fed says they're going to step in earlier, much earlier, maybe as early as the beginning of 2022, maybe within the next 12 months, we see our first increases from the Fed on loan interest rates and that sort of thing. So there was kind of a panic dump across finance, bank stocks and that sort of thing. Temporarily had a big, like 1 day long crash, a fire sale if you're optimist, and then sort of recovered as people realized it's not here yet. It doesn't really matter yet. But you do have the issue of, for the past year, people have gotten, I don't want to say free money, but in a way free money. You have stimulus, you have mortgage rates reduced to zero, a lot of people not paying rent, students not having to pay student loans. So it's not that they were being given a bunch of money so much as they didn't have to spend a lot of money. Because getting a couple of stimulus, getting like, what, $3,000 from government is not going to save anyone's life. Like, let's be real, that's not much money when you have to survive, when you get laid off of your job, if someone's sick, if your car breaks down, the stimulus wasn't going to save you. But what people have found is an interest in finance the past year. People have learned how to invest much more than at any other time, and you're seeing much younger and younger investors coming into the market. And these young investors, say for example college students, they might otherwise have been having a lot of parties that they're not having now, spending a lot of money, like eating out, to go to a restaurant and spend $20 or something, and you can't do that because the restaurant's closed down. You can't go to the gym because the gym closed down, and on top of that you're not paying student loans, which might be $400, $500, $600, $700 a month, depending on how expensive your school is. At least a few $100s probably every month that you're not spending during this whole time. So instead, the smart move, which is a move I advocated myself, was while you have 0% interest on a loan, that loan is not a priority. You should not pay that loan off as long as you can afford to not pay that loan off. And that's exactly what a lot of people have done. They've taken the money that they were saving during Corona from not paying student loans, not paying mortgages, not dining out or that sort of thing, not being able to travel, and they've taken that and they put it into the financial sector. Now, the reverse side of that is that it's not going to last forever. You're going to have a situation soon where people are going to have to start paying rent and back rent. They're going to have to start paying mortgage rates again. They're going to have to start paying student loans again. And hopefully most people have been responsible in their investing. But what's going to happen for a lot of people is these bills and these costs of living that they didn't have to pay until now. For example, student loans will resume in October unless the Biden administration defers them again, which doesn't look like that will happen. So these students, for example, who have, instead of putting, say, $500 a month into student loans, have put $500 a month into stock or crypto or something, they're now going to get in a situation where they can't do that anymore. And people who are having to pay rent and back rent and that sort of thing, they might be used to a cost of living that is much lower right now than it's going to be in the coming months. They're not having to commute. They're not having to do that sort of thing that, pay for wear and tear on vehicle and that sort of thing, where the cost of living is going to go up in the future. And with that increased cost of living, people who haven't planned very well or haven't planned as well as they thought they had, they might not have the money to support that new cost of living that they're going to encounter in the future as returns start to drop off, especially if this is coinciding with like a 10 or 30% drop in assets across the board. People are going to see their costs going up, the asset value going down, and they're going to think, I better get this money while I can get this money. And I think a lot of those retail investors are going to pull out of the markets. And I said this in kind of a harsh way on Twitter. I said that it was going to be a lot of people who had no business being in the markets in the first place who are going to capitulate. I don't want to say that to sound like people shouldn't be in finance, people shouldn't be trying to save or anything like that. I mean that in the regard to people who, like, they weren't buying $500 of S&P, they were buying $500 of DOGE. You know, that's what I'm talking about when I say they have no business being, they're not real investors. The people who were chasing the fact that the market was going up across the board. And when the market starts to go down across the board, they're going to be scared, they're going to capitulate. And I think the steeper that capitulation gets, the steeper that capitulation becomes. I think they will create a race to the bottom where people are just going to, you know, retail investors don't create limit orders, retail investors market sell. They're going to come in, they're going to market sell, drive the price down a little, and the next day they're going to tell their friends they sold and convince their friends to sell, and you get this chain reaction. But I don't think it's going to be some huge 80% decline or something like that, because retail doesn't create that much driving force behind the market in the first place. When you have retail capitulating, you're going to see market makers step in and want to buy that capitulation. And the amount that market makers can inject is much higher than the amount that retail can withdraw. So I think within the next 1 to 3 months, we do see that sort of capitulation. But I also think that you're going to see market makers resume buying and put in a bottom. So a lot of big bears are talking about multi-year bear market. We don't have any idea when it will end. And that could all be true. This is my personal bias. I think personally that we see a bottom within the next few months, you know, give or take maybe a couple months. But you know, if it takes 6 months, it takes 6 months. And if it takes a year, then it takes a year. But I think it's not going to. I think it's going to take about 3 months. And I say that as someone who is pretty perpetually bearish. If you've been following me for a while, or you've been watching what I say for a while, you're here listening to this, you probably are very familiar with me and know that I love to trade a bear market much more than I love to trade a bull market. Skill as a trader shows itself much more in a bear market because, as the saying is, everyone's a genius in a bull market. But as a bear, as someone who likes to be bearish, who is always looking for a good short over a good long, I can't say that this is like a normal market. Creating 30% returns in a year on stocks is not normal. Having a commodity like lumber double in a year is not normal. Having houses that are just, maybe they're worth 200,000 and they're selling for 600,000 because there's 0% interest, that's not normal. So I think this, I wouldn't call it a crash, but this sort of reset, this 10 to 30% decline or whatever it ends up being, I would just consider that a return to normal. After that bottom is put in, I think retail will be very scared. They will see, you know, a lot of people buying the top, a lot of people, you know, as someone in crypto, you probably rode crypto from 10K or 20K or whatever, all the way up to 60K. And so even if we go back to 30, maybe you're in good profit still. But a lot of retail comes in and buys Bitcoin at $60,000 and then overnight you erase 50% of their money. And then after you erase 50% of the money, they have to start paying rent again, or they have to start paying student loans again. And meanwhile, Bitcoin's just going sideways or down a little bit. And so they're going to be afraid and they're going to think, I better get the money I have left out. They're not expecting a big pump. They're not expecting to sit on it and wait for a normal market to carry them up 5% in a year or 6% in a year, what the stock market normally does on a good year. Even if you say, hey, I think it's going to be a great year for the stock market, I think we're going to make 8% this year. That's not why they got into, you know, air quotes, but that's not why they got into investing. They saw crazy run-ups across the board. They saw Bitcoin mooning. They saw stuff like GameStop go from basically bankrupt to $400. They've seen Doge go from fractions of a penny to 25 cents. That's what they came into the market for. They didn't come into the market for normal. They didn't want 8% a year. They didn't want like 4% a year and a small dividend. They want crazy returns really fast. And so when those go away, having already lost half of their money, these retail investors are just going to vaporize. And when they leave the market, it is going to create a bottoming event as market makers move in to hold that line to pick up the scraps that they're leaving behind. When you sell a company like Microsoft or Tesla or Ford, whatever, market makers are not scared to buy this. They're just scared to buy it too high. So if you give them the opportunity to buy it very low, they're going to buy it, and it's going to create a bottoming event. We've had a lot of good news for Bitcoin, for crypto across the board, ETFs and that sort of thing. Increase in regulation, in my opinion, is good to reduce leverage and that sort of thing. You know, the arguments against a Bitcoin are reduced when leverage is increased. Because, oh, well, we shouldn't have Bitcoin because some people can do 125x leverage. Okay, so take away 125x leverage and now they can only do 5. And now what's your excuse, right? The more regulation we get, the fewer excuses there are to try and keep people out of Bitcoin. So we've had a lot of good news. We have a lot of big buyers entering Bitcoin, banks and your Michael Saylors of the world getting more exposure to it. But across the board, I think retail has lost a lot of money. Most people are not up, 2 or 3 or 4x on GameStop. Most people, they made a little bit of money, they got out, secured a small profit and went on about their lives. Unfortunately, a lot of them will have gone in on the way up or at the top and have since lost money, and they will be the first who capitulate. When you retail, you're looking at a market like Bitcoin on the way up. Retail thinks, well, it's going up, so I'm going to buy it. If you're a market maker, you think it's already gone up, so I don't want to buy it. And the same way on the way down. If you retail and a price is dropping, you think, well, the price is going down, so I don't want to buy it. If you're a market maker, you think in terms of past tense. You think, well, the market's already gone down, so I want to buy it. And if it continues to go down, then it will have gone down more, so I still want to buy it because I think it's at a good price. And if it goes down more, then it's just at a better price. That, of course, is contingent on being able to value the market. It's very easy to look at something like AT&T that has a very long history and determine a fair market value price for a share of AT&T. Share of AT&T, fair market price, $25 to $30. Easy. You can tell that from its history. You can tell that from the economy right now. Bitcoin, something like that is much harder to gauge. But I think that it's getting a market value as institutions and very wealthy individuals move into Bitcoin publicly. And so when you have someone like Saylor or you have an institution like JP Morgan move into Bitcoin at $24,000, well, what you're telling the public is that Bitcoin is worth at least $24,000. So if Bitcoin goes below that, then you want to buy it because Bitcoin, might not be worth 35,000, but it's definitely worth 25,000. So that's the kind of message that the market makers are sending that I don't think retail is really going to pick up. And so I think the best move right now, because we don't know when capitulation could happen, we don't know how deep it could go, we don't know how long it will take market makers to move across all sectors, bonds, treasuries, talking about stocks, real estate, everything. I think we'll get a bottom in for basically everything to continue growth for the next couple of years. I'm pretty bullish as someone who's as bearish as I am on like crypto today. As a TradFi person across all markets, I'm pretty bullish. Like going into 2022, 2023, I think we'll have just slow growth as the Fed regulates inflation, as people return to work, as they rebalance their cost of living versus the income and that sort of thing, I think we'll get slow growth. But I don't think that this is a time to be in shitcoins. Bitcoin dominance is going up. Altcoins have dropped against Bitcoin. They've dropped against US dollar. And a lot of them are going to see retail, especially these things like DOGE, which has probably proved me wrong, like Elon will pump it to $1 or something, but things like DOGE that have big retail interest, especially amongst young people who don't have very high income, I think those things will get really punched in the gut the hardest. And so I wouldn't be playing altcoins. I think if you have to make a move, the best move right now to secure a position in crypto is just to buy spot Bitcoin and leave it alone. And yes, maybe it goes down 30% like I'm thinking, maybe it goes down 50% and surprises me a little bit. But in that case, the best thing you can do is just to continually buy spot and lower your average. I don't think that this is a place to be playing leverage. It's not a good place to be playing leverage in Bitcoin specifically. Bitcoin specifically is in the middle of a range. It goes up for a couple days, it goes down for a couple days, it looks bad. And at any time frame, it looks pretty bad. I think if you're going to do a leverage play, you should be looking to altcoins that have good short opportunities. Otherwise, you're hedging against shorting altcoins a little bit by buying spot Bitcoin, expecting that to outperform them. But there's no proof against the macro trend right now with Bitcoin being down. There's no proof against stocks right now with the macro trend being up. There's no proof for what I'm saying other than experience in the market, and I hate to say that because it really doesn't mean anything. Somebody else with much more experience can come along and say something completely different. And I think you see that a lot on crypto Twitter. You have a lot of people who are like huge followings, and unfortunately there's this false equation in our mind where we think that someone with a big following must be right more often than someone with a small following. They must have a big following because they're right a lot of the time, and that's not true at all. It just means they're good at marketing. Someone who is like biased to be bearish is not as fun to follow as someone who's a permabull, because the permabull is telling you that you're going to make money. He's telling you that your investments are going to go up. He's telling you that he's in there with you, probably even if he's not. And the perma bear is telling you, yeah, this doesn't look great. This is not the best idea. You're probably going to lose money. And what do we want to hear? You know, as consumers of a product, you know, as consumers of a brand, we want to hear that we're smart and beautiful and our investments are all going to go up and we're going to make a lot of money. And that's why you have permabulls who just have absurd followings, even though the strike rate is not necessarily very good. And there are plenty of people who do know what they're doing who disagree with me. For example, Calio Crypto has very publicly been one of the biggest bulls on the market right now. He's very bullish on Bitcoin. He even had a post recently, and it really made me think. He said, show me on the chart where Bitcoin is bearish. And I was kind of stunned by that because I thought the exact opposite. I was thinking, show me on the chart where it's not, you know, show me where there's any strength on this market at all. And I looked and I tried to look as a bull. Am I missing something? Is my bias wrong here? Is it just a bias? And I couldn't really change my mind, but that doesn't mean that he doesn't see something I don't, and it doesn't mean he's wrong. Or maybe we're both wrong and we're just going to crab for 6 months. But I think retail soon will get fed up with this game. They don't like to see themselves losing money. They don't like to see the markets going down. They don't like to see it even going sideways. It's something retail has never experienced before. Traders who are like 25 or something, 18 even, and this is the first time they've gotten into finance. It's the first time they've made any purchases, and they feel like they understand everything and they know everything because ever since they started buying, things have only gone up, and they're in Wall Street bets and they're following the calls and making lots of money. They never had that experience of it just falling out from under them. And maybe if they were in Bitcoin when it was 60K, they've had a little taste of that, but I don't think they've ever seen it across the board like we're going to see in the next few months, the next half of this year. So when such an extreme low comes in, as I said, market makers are going to say, well, realistically, what's the downside now? What's the downside risk at this point if the market's capitulated so much? How much further down can it actually go? Because that's how wealthy people think. They think in terms of what can I lose, not what can I gain. So what you can lose when Bitcoin is $60,000 is $60,000. What you can lose when Bitcoin is $35,000 is $35,000. So it's much more appealing to buy at 35 than 60 because your downside risk is half of what it used to be. Now, of course, we all want to buy as low as possible, but if you're retail, you're not thinking, what can I lose? You're thinking, what can I gain? That's how the average investor thinks. They think, I'm going to buy GameStop at 200 because everybody's saying it's going to go to 1,000, and I'm going to buy it at 200, and I'm going to make $800 a share, and it's going to be great, and it will be all victory, and everyone will sell at $1,000, and no one will get burned. And it's really just absurd, right? And the realistic point of view there is, I'm buying this company that's completely inflated and is not really a good company. Being objective, GameStop is a shit company. Terrible. It's basically always been terrible. They treat their employees horribly. They aren't like diversified at all. They don't stay contemporary at all on their product. Like, it's a bad company. And you're buying it at $200 a share when you could be buying something like, I don't know, you could be buying 40 shares of Ford when it was $5 instead, and now you would have tripled your money on a real company instead of like probably losing your $200 on a shit company that's just artificially manipulated. So that's what I look for as a market maker. I think that's what everyone who is familiar with markets looks for. When we see, I keep going on the Ford train. I don't really even, I'm not like in love with Ford or anything, but after 2008 crash, you know, when Ford was like $1, the downside was, well, I'm going to lose $1, right? But what's the likelihood? The likelihood is that it goes up because it's a real company with a real product, and it's not like not shrinking permanently. It's not on the verge of bankruptcy or anything. And you know, the automakers getting bailed out by the government shows that they're not going to die in 2009. And during the Corona crash, you have the same thing. Ford goes to like $5 and some change, and the bears are saying things like, well, they don't have EVs, they don't have self-driving, they don't have this sort of thing. And you think, this is a company that's been around for 100 years. Are they going to sit by and die, or are they going to get into these systems? My bet, of course, is they get into these systems. So I started investing very heavily at like $5. I think from 5 to 9 or so, I was buying all the way up, and I don't know what it is today, maybe 12 or something. I think it capped out around 15, but of course on the way up, they say, hey, we actually have a lab developing self-driving systems. We just haven't really talked about it much, but they're really, really good. And a few months later, they say, you know what, this electric vehicle thing seems like a good idea. We're going to get in on it. We're going to start developing that. And the price goes up. So I was thinking, though, as someone buying low, what's my downside? $5? $5 a share? It's not going to go to zero because it's a huge automotive company that's proven its success over hundreds of years. The worst case scenario is it goes down for a little bit and eventually goes up, and I lose an investment opportunity, but I'm not going to lose money. On crypto, you sure as fuck can lose money. I mean, all these people who come into things like DOGE, you know, if it stops being flavor of the month and people see that it's not going to $1, it loses 25 cents pretty handily, and it starts to go back toward something more reasonable for DOGE, you know, like a penny. There are going to be people who lose basically their entire investment. There are going to be people who lose everything they put on. Like, Dogecoin millionaire is going to be Dogecoin thousandaire, you know, and that's not unreasonable to think that something like Doge without, you know, Elon's. I hate that you can't talk about Doge without talking about Elon, but that's a bad sign for it, right? If you can't talk about an asset without tying it to one person, then that's very, very negative. So, you know, he doesn't have his real money there. He's not buying Doge. He's just shilling Doge because it's funny to him. He has nothing at stake. He can't risk that, right? He can't risk actually buying Doge and then shilling Doge because it's possible that it becomes regulated and, you know, then he would be in legal shit. But he can shill Doge all he wants if he doesn't own any. So he's not propping up the price. He's not coming in to help you out. And I think people who are in these sort of fake investments, they call them investments, but it's really just a gambling house. And they're going to lose big versus people who are in things like Bitcoin or traditional stocks. You know, you can't really go wrong just buying S&P 500, and in a lot of ways Bitcoin is like the S&P 500 of crypto. If alts go up or down, doesn't matter, Bitcoin fluctuates, and the volatility you find in Bitcoin is not going to be the same as the volatility you find in altcoins. But you see that overall, over the history of the asset, the S&P 500 has never gone down over a 20-year period. You see over the course of its history, Bitcoin has never gone down over a 5-year period. So if you want to draw your equation, that's not how you say, you want to draw comparison between these, it's kind of the S&P 500 of crypto, as close as you can get right now until some kind of ETF comes out. But even if there's an ETF, like an altcoin ETF that says we track the top 100 altcoins, why the fuck would I want that? Who wants the top 100 altcoins when you know like 95 of them are going to fail? I just want Bitcoin. That's why I trade altcoins. I trade altcoins to get more Bitcoin. So as this market flushes out over the coming months, look for the whales to be putting in a bottom. Follow the whales. That's the smart money. That's where you want to be. And if that's too much work for you, you don't want to try to knife catch, you don't want to be bothered with what's going on the macro, I don't want to stress about the daily or the hourly, I don't want to be watching monthly candles, I don't know who to listen to, then don't listen to anyone, just dollar cost average in once a week on Tuesday, or once every 2 weeks, or once a month, whatever makes you comfortable. Buy a little bit that you can afford to sit on, and just sit on it, and keep doing that for the next 5 years, and to be very happy. That's the best advice anyone can give you for crypto. That's always been the best advice for crypto. People like to build the brands talking about how they shorted the top, long the bottom, called this, called that, clout chase, whatever you want to call it. But the best strategy for someone who you don't need to know how blockchain works. You don't need to know what any coin does at all. You don't need to know how a public ledger works. You don't need to know how a personal seed works. You don't need to know public versus private keys. You don't need to know anything. You just buy some spot Bitcoin on your Coinbase account or whatever you have. And that's it. That's all you got to do. And you're going to probably make pretty good money. Unless Bitcoin fails and goes to zero, then that's all you have to do. You buy spot once in a while. It's not like picking stocks and you need to know how the technology sector is doing and who the competitors are and what's the CEO's history. You don't need to know any of that stuff. With crypto, it's actually very easy. As long as you have the fortitude to just hold your spot, then that's the best approach. Otherwise, I hate to say, I'm still not bullish yet. I can't agree with Calio or the perma bulls yet. I do see some possible sentiment change in the markets for crypto, which is possible because they've already very much taken a nosedive, whereas traditional finance markets have not yet seen capitulation. So it's possible that crypto reverses first, but I think in the meantime, crypto's crashing is going to fuel retail coming out of other sectors. I think it's more likely to inspire them to sell off other finance instruments going forward as they, over the next few months, have to start paying bills again, have to have expenses like travel and petrol and car maintenance and all that sort of thing that they have not had to pay for the past year or so. So that's everything I wanted to say and more about the state of the markets. Went much longer than I'd hoped to go. So we'll just look at Bitcoin, ETH, and some generic alts real quick, so that people who care about that sort of thing more than big ideas, they can have the zoom in. So we're already on Bitcoin. We can look at that a little more closely. We'll just look at the small time frame and go up to the big time frame. Small time frame Bitcoin, you have a nice little rounded bottom thing going on here on the 4 hour. That's usually pretty bullish. I like to find sort of rounded bottoms, rounded tops going on in my price action, and I really love to play those. However, this being on a 4 hour and not on like a daily or something is more of a concern to me. You can see that this area at around 3400 was acting as an interim resistance for the 4 hour, and now that has been flipped and you're looking more toward about 34.7 or so on the 4 hour. This doesn't respect previous price action so much. In the past you had some nice interactions around it, but more recently you're not really seeing this level respected very much, so I don't expect too much to happen here. Not really looking for this to be an important move, and if you were playing the breakout, I would have already closed that position. I wouldn't be trying to fade this resistance because it's not really confirmed yet. I wouldn't be relying on this support too much because it is low time frame. If you look at the daily, there's more of a bull case now. So the perma bulls who were bullish for basically no reason before now have a little bit of a reason to be bullish. We have locked in a higher high, the previous high being here, and now we've gone up to this point, and we have locked in a higher low, presumably off of a double bottom, which is pretty good. You could start making an argument for some kind of Dalai Lama thing if we move sideways. But for me, this is exactly the sort of situation I was warning against being too bullish about. So I warned against being really bullish when this kind of thing happens. You run into the midpoint on the RSI, you run into a resistance, and you flip the EMA temporarily, but it doesn't quite hold. And so everybody who's longing a breakout sort of prematurely, not waiting for some kind of confirmation, they get wiped out. So this sort of surge above the EMA is exactly what we've had down here. We get little breakout, not even much of a fake out, to be honest. And then we immediately fall back under the EMA. This was up to a resistance, which we rejected off of in that fall. And if we look at our RSI, we're just basically in the middle still. But with price having fallen quite a bit, being in the middle is not really what you want, because that means that that fall is normal. It's normalizing that sort of fall. So with RSI, again, if it's mostly in the bottom half, then you're pretty much bearish. If it's mostly in the top half, you probably have a bullish bias. We're still very much mostly in the bottom half through this whole price action movement that's been crushing everyone. So even though price is continuing to revert downward, the RSI is staying basically in the bottom half, not really having any breakouts even here on this most recent push above. We didn't get past the 50 mark on the RSI. So what this means is simply that we have more room to move down, and it will be normal on the RSI, and less room to move up before hitting a resistance that would be considered overbought. So it's pushing down the point where we're considered oversold, it's pushing down the point where we would be considered overbought. And for me, as a very big reversion to mean kind of person, I'm looking at just what is the average price throughout this whole move, and it doesn't look like anything out of the ordinary to me. You have a little bit of time above and a little bit of time below, but we're kind of just returning to this macro downtrend. And unless we get something very drastic in the other direction. I don't see any reason yet to change my macro bias. I don't see why bulls are bullish yet. I see why they want to be. They want to point to a higher high and a higher low on the local trend. They want to look at something like this and say that the local trend is up, and that's all fine. But until we really have some kind of breakout, and I'm still looking at this point around 35.5, until we get basically to the top half of all of this crab zone, I'm not going to be bullish. I don't feel like there's any reason to be. Maybe I should turn this line like black and put a few skulls on it or something. But until we take the midpoint of this crab zone, I don't understand why people are bullish. So when Calio says, you know, that he's a giga bull and show me where the chart's bullish, well, here's where the chart's fucking bullish, my man. Everywhere, right? No, nowhere. He says, I said it wrong. He says, show me where it's bearish, right? It's bearish everywhere. It's bullish nowhere. I don't see why anyone is super amped about this. You had a breakout that failed and created a new bottom all the way down to the weekly resistance. That's bearish as fuck. You have all of this attempted move up completely deleted in one move down. Bearish. Okay, you've got a local higher high, but what happened with that? It hit a resistance, lost the EMA, fell back below it, never even broke RSI half point. Bearish. Like, there's nothing here that says bull to me as a high time frame trader. The only thing that is going to change my bias is this line right here. Until we take 35.5 back convincingly, not just wicking above it, but until we take it back and hold it somehow, wherever that top comes in, doesn't matter. It can be all the way up here. As long as we're above this, I'll be happy as a bull. But until then, down is down. What are you going to do about this? It's going nowhere. There's no bull case. I don't see what they see. I've really tried to. I've very much tried to get in that Zen place and put aside my bias and understand what they're talking about, but it's just not there. I mean, yeah, you've got a local higher high, a local higher low, but look at your macro. You've got a lower high and a lower low on the macro, and the more macro your assessment is, the more accurate it is, the more trustworthy it is. So you know, like I was saying before, being a perma bull is good marketing, but that's about it. No one wants to follow you when you're bearish. They want to follow you when you're bullish. And who cares if everyone else loses money? You just say, well, you know, I was bullish and I was wrong, but I have such great risk management. My stop losses all triggered and I was a god and I lost 2%. And if you lost more than that, that's your fault. No one made you listen to my call. You're responsible for your own management. And then you pat yourself on the back, even though you were wrong. And you treat everyone else like they were stupid for following you because you were a perma bull, right? That's much easier to sell than being bearish and being like, look, I don't think you should buy this. Don't trade this. If you got to do something, do the boring thing and average in. No one wants to hear that. So be careful. I don't see the bull case. It's still not there for me. And if you come out to the weekly, we can look at the weekly as well and see what have we got. A big ugly doji under resistance. A big fucking ugly doji under resistance. And we're kind of just, you know, you do have extreme wicks, but we're slowly getting deeper and deeper wicks. Big scam wicks aside, you know, we're just looking at kind of the trend here. That's not like really where you would draw any kind of trend line. I think the best thing bulls can hope for is sort of a rounding out on a higher time frame. We looked at it on a 4-hour, but to see that on a higher time frame would be quite nice. Unfortunately, it doesn't look like that's the case. This on a weekly, you know, going into Saturday, this is how our weekly is basically going to close on a decision doji. So a decision doji with so much of the market really poised to fall, I can't be too bullish on that. There's nothing to see here, right? You wicked up to resistance and then you got completely rejected. We're nowhere near EMA, and we're losing this 3500 as a support, which is a lot of people are pointing to the 3500 as being like the level to pay attention to because of this high time frame. So losing that, man, I don't know how you can be bullish. I just really don't understand it. I wish someone could explain it to me. And then you look at the monthly and you have the same thing on the monthly. This point at 34.5 is the only real hope that you might have done something, maybe that this month's previous close would hold, but we're below that now. And so all we've really got on the monthly is a very obvious top and no real obvious bottom. Maybe you could point to something like this around 14k. A lot of people going in deeper on the weekly pointing to something around 28, which would be like the bottom of this wick and sort of the previous formation here. I think that's like a minimum, right? Because that's probably going to put you in line with the EMA. That would put you in line on RSI to maybe go down a little bit more, and we give you a logical support area to go to the 28. I'm not saying that's my prediction. I'm just saying that makes much more sense than expecting this kind of sell-off to just become this. If that happens, if we go from parabolic advance to basically no time spent distributing at all into another parabolic advance, then that'd be terrible for Bitcoin. I mean, I know it's great if you're a short time frame trader, you're gonna make a lot of money, but as far as Bitcoin for an asset going into the future, I think that's terrible. I think the best thing for Bitcoin would be to come down, do some retrace, do some crabbing, just bounce around a little bit, and then like form another basis for moving up, which is what happened exactly between 2017 and 2020. You know, you had a parabolic advance, but then you just had some retrace, some reaccumulation, you bounced around for a while, and then you had the foundation to move up because you stopped doing the parabolic shit and you erased some of that for a little while and allowed people to kind of cool off, let the market cool off. So that's what I would like to see, but I don't know that we're going to get that. I think it will mostly, as I said, probably have a few months going into the second part of this year where everything, all the TradFi markets, everything goes down, and then we can start a slow advance would be very nice for everything. For Ethereum, you have tenuous position. I want about the same thing with Ethereum, where you don't want to just you don't want to make a random text box, but you don't want to just get something like this where you pop above the RSI. Shit, I said the right thing and corrected it to the wrong thing. Where you pop above the EMA into a resistance and then just get rejected. And so far it's not doing that so much. It did get rejected from resistance basically all the way to support, and then it's trying to decide what it wants to do now. But to me, that sort of price action looks really bad. I would rather just extend this and call it a chop zone than try to trade anything in it. I don't really like the price action here. The difference with this price action is you have a pretty undeniable, like, lower high. If you're looking at macro, and to a lower low. So if we were going to go lower low again, it would be probably more likely a double bottom around the weekly support. But if you're looking at the local, yeah, bulls want this to be a higher high. They want to call this a higher low. I don't think that's something you can really confirm yet. It's looking kind of nice on the small time frames like this, but I mean, if you're looking at trend, it's still like nothing. It's not, what are you going to do with this, right? you could point to something like this. You can really like try to work in some kind of trend line, but I don't think that's very useful. If you're looking at your mean, your average price action just from the top, pretty straightforward. You know, you have some above, some below, but overall trend is down and don't want to fight it. It's less clean than Bitcoin, which is to be expected from basically any alt. And I think this is not a surprising bounce because you had sort of a parabolic downturn, and of course you would expect that to break. But once that breaks, we don't really know what's going to happen. We could very easily just bounce around a little bit and go back down. This is basically just, I call it an RSI reset. It's basically just an RSI reset. And from here, you know, if you're bullish, you're probably looking toward this, but not yet. I don't have any interest in trading ETH. I've been taking my own advice of just dollar cost averaging into ETH very slowly, and wherever the bottom ends up being, then that's fine with me. Litecoin is basically just an ETH clone, except its top looks very shitty, looks very bad. You had a DOGE into some red. This, not really a reversal pattern. The DOGE is not right. This, the past 3 days, a big red into a nice cross, followed by green. Would be a reversal pattern if this green weren't like pathetic and weak. If it had gone up toward, you know, like this kind of area, which it has, you know, it's got like 12 hours, maybe it will make it, but so far I'm not too impressed by this move up. It's kind of the same issue as ETH, where you had sort of a parabolic breakdown. Of course you're going to bounce off of that, bouncing into resistance under the EMA, and having so far shown no sign that you're going to break resistance and head back up after making this sort of triangle breakdown, to come up and not even test the bottom of the previous range. That looks weak to me. I'm not excited to play that. I would much rather short a break of this than try to long a break of this. And Doge, I very publicly played a short on. This big volume candle right here, this big green boy, was an Elon tweet, and as soon as I saw his tweet, unfortunately I didn't see it fast enough to like catch the Pico top. I caught it about here, and as soon as I saw the tweet, I just retweeted it and said short. And somebody didn't like that. I got a little bit of grief for it, but as I said, I'm not looking to marry the bag. And I had to go in and out of this a couple times because I had a day of meetings and, you know, normal kind of work, or just sitting around the house. I can check it whenever I want, but when you're in the big dick meetings, you can't really do that. So I ended up making a pretty good clip, and I want to say I got out once I saw sort of this, the bottoms of these and the tops of these reverting back to the top side. So somewhere on this green candle around where I placed the black mark is where I ended up getting out. So it was a nice short. It's only about 4%, but I was playing it on leverage, so thanks to leverage that I say never to use, I was able to make a good amount there. Now this you might also notice on this low time frame around at bottom, which we saw also on Bitcoin, but I'm not really interested in playing this range. If we were to come up toward this resistance that I've marked, toward the top of this, I would be interested in shorting it. If we were to lose it, I would be interested in shorting it, but I'm not really looking to play this until it has a clear direction. I don't want to play this middle, especially around this 25 mark. Why I'm so excited about Doge hovering between 24 and 25 is because so many Americans are in on this. And Americans have a coin that is 25-cent coin. So for them, it's a very big psychological unit. Like for everyone else, we measure like $1, $100, 1,000, whatever. But for something measured in cent, 25 cents is a very big psychological mark for Americans. So especially most of them being young investors, I feel like if we reject the 25-cent point, that'll be a big catalyst for dumping it, versus if we hold 25 cents, it would be a nice catalyst for moving higher. So not really interested to trade this mid area between 24 and 25, but the macro is quite down, and to see Elon come in and do a big pump tweet in this disgusting downtrend that shows no relief yet so far was an easy short. It's like a no-brain short. So you can see on my daily chart that I started to short initially. I wanted to anyway because of this resistance level at like 26.4. I wanted to short anyway. Then when Elon pumped and gave like a higher entry than I probably otherwise would have gotten, it was an easy short to enter into. So beyond that, I'm looking for kind of this blue level that you can see on the hourly to break down, and if we can move toward these blue marks, we can give up the 24 handily. We'd be very interested in holding that as deep as it wants to go. So she said. Tron I just have open as kind of a representative of the broader shitcoin markets. It's not that I particularly hate Tron or that Tron is different somehow than other coins. It's just that a lot of the charts look the same. So if you're looking for a short, you don't really need to look at every coin on the market right now. You can just look at a high cap that's pretty representative of basically everything. And the average price on this is pretty clean. There are not a lot of like big swings. It's just been pretty steadily down. So you did have this sort of triangle formation like DOGE that broke down. And it broke down very hard and then kind of sprung back up. Now if the bottom, this red mark of this triangle formation, proves that it wants to hold as a resistance, then absolutely I want to short. If it can't break this 6.8-ish mark to try to reclaim its previous range and continue moving up, then I would expect it to continue along this average price decline that it's been experiencing toward the 4.5. So if this 6.8 continues to hold as resistance, we start to see a turn down, and especially this is like my death mark here, the 6 basically, the 6 exactly. To lose that, I think you're safe to just capture the bulk of this move down, which in something worth so little is pretty big. To capture that on like even just a 1.5x or, you know, no leverage whatsoever, even you could just do a 1x would be pretty big. Don't necessarily expect it to go completely down to the bottom of this level or something like that, but I do expect, again, I was saying 10 to 30% capitulation across most major markets. So to see something that's looking like it might have about 30% down seems completely reasonable to me. That's why I'm watching Tron, just as a generic representative of all altcoins, not because I hate Tron. So that's what I'm playing with right now, looking at these two, looking at Doge more for a psychological thing with the 25-cent mark, looking at Tron more as kind of the ambassador of shitcoins, because I think this trend, there's no reason to be bullish about it breaking unless this red line here can be flipped and you can move back into the area that this triangle lost. It's much longer than I hope to go, and my wife is probably going to kill me, so if I never see you again, she's thrown me in the ocean and taken all of the money. There's no reason to send a search party. She earned it by putting up with me for so many years already, so just let her have it. She's worked hard for that, tolerating me. Don't send the police after her, just let it go. If there are any requests, anything you'd like to talk about in particular, anything you want me to look at across stocks, bonds, crypto, of course, whatever it is. I'm not an expert on real estate, but I'll have a go at anything. If it's finance, I'm interested in it, so we can relax, have a good time, and maybe together become a little less stupid. Watch out for the perma balls, mind your stop losses, best of luck to you in all of your trades. This was Nika, and I will see you next time.